It's been a concern hanging over the markets for a while now, a global economic slowdown. And today, several data points added to investors' jitters. Reports from Europe and Japan show that manufacturing activity contracted there this month. Here in the U.S., mid-Atlantic factory activity contracted, and business spending on durable goods was soft. Things were tempered a bit on word the trade negotiators were working on a framework to ease U.S.-China trade tensions. But overall, stocks did end lower today. The Dow Industrials were down almost 200 points for a time, finished down 103. The Nasdaq snapped its 8-day win streak, falling by 29, and the S&P gave back just about 10 points. Steve Liesman gets us started tonight.
Another day, another round of soft economic data. Durable goods orders came in, delayed from December by the government shutdown, but below expectations, up 1.2%, propelled mostly by aircraft orders. The business spending category fell for the fourth in the past 5 months. And the key Fed barometer, the Philly Fed Manufacturing Index for February, went negative for the first time since 2016. But St. Louis Fed President James Bullard, in an exclusive CNBC interview, said the data is in line with an expected economic slowing, not worse than anticipated.
We're expecting growth to slow down in 2019 relative to 2018. We're going to get 3% plus growth for 2018. 2019 probably isn't going to hit that. 2.25%, I think, is a good number. That's not a terrible outcome. It just means that the economy is returning to trend growth.
Bullard was an early advocate of the Fed ceasing its rate hikes, a policy the rest of the committee has now come around to belatedly.
I'm hopeful that this will set up the U.S. economy for a good continued expansion. This expansion is going to be the longest in the post-war era as of June 2019.
Bullard sees a higher chance of a recession, but it's not his base case. He thinks the U.S. can avoid a recession despite global economic weakness. In the meantime, as that slowdown takes hold, there could be more days of bad data to come. A key to all this could be Federal Reserve policy. The minutes of the Fed meeting told investors Wednesday that not only is the Fed on pause with rate hikes, it's also likely to end its controversial balance sheet reduction this year. For Nightly Business Report, I'm Steve Liesman.